Hi, it's Adam. I'm coming to you as always from the digital studios of MarketClub. And the market we're looking at today is something we haven't looked at for a while, but we've had a number of requests to look at it. And that is the dollar index. It's a futures contract and it's an index much like the S&P 500 indexes of stocks. This is of currencies and reflects the US dollar against a basket of currencies. As you can see, when the market's going this way, that's good for the dollar. When it's going this way, it means the dollar is losing its purchasing power. However, what I want to show you today is that we are very close, in my opinion, of potentially making a turn here. So let's just take everything off the screen, which we can do very quickly with MarketClub. And let's put in our Fibonacci lines, which we've talked about before. But first, let's just put our trade triangles in. And as you can see here, I've just put the monthlies in, but the weeklies would be showing right here. And you can see we have a minus 70%. But let me put the Fibonacci in now, and we'll go back to the triangles in just a second. So it's going from the very top point of the Fibonacci, drawing from here down to the lows that are right here. And as you can see quite clearly, the market, or the index in this case, is very close to this 61.8% retracement level. In fact, it's 83.34. The index is currently trading, we're doing this live, at 83.93. So it's within about 60 points of where we consider to be a classic retracement. Very close. However, what I also want to show you is this area here, and that's beginning to turn up. The momentum is beginning to lose downward momentum in this particular indices. And watch this very carefully. If you see this crossover here, then I think we could see this market come back up quite easily to these levels and possibly to the 87 level and maybe even make new highs. But the important thing to look at right here is this level right here. That's our monthly trade triangle, and that remains positive from 78.44. Market's currently trading at 83.93. So it's still remaining, the big trend is still positive of this market. Now the two flies in the ointment, so to speak, are the weekly, which is down, and the daily, which is down. However, we're starting to tighten up here and seeing this market sort of get very, very tight, and it's starting from an area that we would expect this market to reverse from. Next week should be very interesting in the dollar index, as we could see the MACD indicator turn up, as well as a potential turn up in our daily trade triangle. It's going to take a while for the weekly to turn up, but certainly those two items could turn up next week and propel the dollar higher, which I think would be a good thing at this point in time. You've also have a trend line down here, which we can draw in just by freehand. So that's another barrier that this market has to go at. But this would be not an unusual pattern for the market to go up, come down, and go back up again. This is Adam Hewison coming to you as always from the digital studios, wishing you all the best in your trading, and I look forward to seeing you soon.